Welcome Spec-K traders to the 8/14/2019 update on the S&P 500 cash market SPX. Haven't we had a wild ride the last couple days? Extreme volatility. We're looking here at the weekly chart of the SPX. This was the big collapse in early 2018. This is the big fall through the fall of 2018, the huge bull market in 2019, our fall in May, a correction, another push, and now another correction very much in progress. Note the potential for this correction. We have to consider the possibility that we are going as deep as these earlier corrections. It's not impossible, but one step at a time, one day at a time. For right now, certainly we are in a downtrend mode, a bearish mode, and we would expect this to continue down into this big area of support and resistance that I have grayed out here. Notice all the highs and lows throughout the last couple years inside this area. A very likely area for this move to eventually terminate and turn back up, though there certainly is possibility we can go deeper. I've taken off all the Elliott wave counts here because we have quite a bit of complexity and a number of alternatives. But let's just talk through quickly a couple of most likely possibilities. One is that we are doing a expanded flat off of a one wave that completed here. So we're doing an A, B, C back down, which would probably take us down to around this 61%, though it's also possible we could stop and turn and finish the flat closer to the lows experienced here. That is the most likely scenario. There are others, including that we've completed a high-level, high-degree wave here, and we are initiating an ABC down, and we can expect to go much, much deeper over the course of time, similar more to this correction. There is a possibility that we turn right here and go right back up. That's not impossible, though any downward movement that continues us past this low right here at about 28.22, and that model dies quickly. Most likely we are going deeper. I will be looking to put on some type of either butterfly or a put spread in this area right in here to try to capture some value, and if and as price successfully pushes down towards it, I may put another one down deeper and continue that process in order to capture value on the push. These are relatively low cost to establish when they're way out of the money, as these would be. This is the value of anticipating the market move and knowing something about the Elliott wave structure. We can expect that this is getting down to at least this far. So why not take advantage of that and capture some gains in the process? Of course, going short's always high risk. There is a long-term push upward in this market. We can see this trend over even the course of this. Let's collapse this and we'll really see it. We can see that there is a long-term push up. So this is a counter trend trade, but we have to go with the flow at this point and expect that we're going deeper. Let's zoom in a little bit. In fact, let's actually change markets and take a look at the /ES, the E-mini futures market, which in a sense is the nose of the dog that drives the SPX, and we're looking at 4-hour bars here. The gray areas are the overnight periods, and I like this view at times to sort of fill in the fact that there is a 24-hour market operating around the S&P 500 through this futures market. And this futures market, its actions tend to drive a high degree of money flow into the actual S&P 500 stocks and out of them. So it is the nose of the dog driving the market. So what we see here is that we came down last night and today. We're turning back up overnight. Does that mean we're going back up? Well, I expect more backing and filling through here, but overall what I expect is that this A wave structure down over here, We're now being followed by some sort of B or X wave, pretty weak, a lot of volatility and filling, but eventually we'll get a C wave similar of size and proportion and time and price that will happen out of that X or B wave and taking us down to prices much deeper than this low. So that's the classic structure that we're looking for. So as traders, and we really have to move down time frames here in order to trade this market, or step aside, not a bad idea as well, would be to look for this price pushing back up into this zone right around here where these Fibonacci levels are highly overlapped. Look for a turn off of that. Take a short. You could stop right above that level, or a bit more conservatively in terms of stopping out, you could short above these two highs right here. And not a bad short if we can capture that tomorrow. Best of luck, and be careful out there. It's a very volatile market. Good night.